Well, welcome to the second iteration of Eric's one-on-one. I have Jason here from Convoy. And again, I've decided to do these interviews to help, fill in some gaps from Mr. Mishka leaving. But the goal for me is to learn about things that I am interested in. And this was a thesis that was set by Mr. Levy, who is kind of the reason he does it as well. So I'm bringing people in here just to understand what they do, get kind of a real scoop in there, try to avoid the PR fluff, and again, to see how they fit with the ecosystem and see how they're innovating in their fields. So why am I interested in Konvoy? Well, Konvoy is one of the OG VCs in the video game space. And, the current market is slightly challenging, to say the least. IPO, the market's absolutely closed. M&A is coming to a relatively screeching halt, although that may actually pick up soon. And again, there was a ton of money that was invested by the VC community over the last few years in this kind of unprecedented bubble, particularly in the gaming space and other spaces as well. But basically, the question is, how do VCs work in general, and how do they work in such an environment? So again, we have Jason Chapman, who is a managing partner at Konvoy. He started Konvoy with his brother, Josh, which is interesting, and then also Jackson Vaughn. Welcome, Jason. Tell me kind of a bit about your background, the founding story, the synthesis and genesis of Konvoy, and how long you've been working at this.
Thanks for having me, Eric. I also want to just kick off and say I'm not your second victim, as you sort of proposed as this might be for this conversation. So hopefully I can hold my own. Been a long listener of Deconstructor of Fun. It's been a minute since I've gotten to chat with you guys on the podcast, so enjoy these one-on-ones with you, and so thanks for having me. Background for me and also for Josh and Jackson, we all three have a very similar background, which is a little unique, where all three of us grew up in Africa, Latin America, and Asia as kids. So Josh and I are the son of a U.S. diplomat, so that's why we moved. So think of a military-ish background, just in embassies instead of military bases. Jackson was the son of an NGO worker, kind of in a similar format. And it happened that we overlapped in two countries with Jackson, in Bolivia and then in Mozambique. And so we did not live in, when a lot of people think of the embassy life, they think of like the James Bond movies of, him running in and out of Western European embassies that are beautiful. That's a little different than the reality of how we grew up. I loved our upbringing, so it's a big part of who we are and kind of who shaped us to be what we are today. I would tell you also that's where we fell in love with games. So we grew up in a lot of places where gaming was a huge part of the culture. After school, I would go across the street to an internet cafe and play games with people. I played in leagues, and that was a huge part of who I am today. I still play video games every single day. I think it's a tough market to be in if you're not actually a gamer yourself. This really is an art and a passion, and I think a dedication that, if you're not part of the ecosystem, it's tough to invest into it. So let me fast forward. We all three went to the States for college. We ended up doing a bunch of different things. I eventually ended up working in research at IBM. My background is quite technical. I convinced Jackson to join me in my same research division, so I actually recruited him in. I looked really smart to my bosses at the time when I got him to join. And we were in the division that worked on predominantly machine learning applications within the larger enterprise, and a lot of applications that we worked on ended up being in games. And so that was kind of our first foray into what I kind of call the infrastructure and back kind of underbelly of games. And so that's what got us hooked into the business side. We always were big gamers ourselves personally. Then we kind of started talking with Josh, who happens to double as my real life brother. We often have been interviewed and questioned about what's it like to work with your actual brother. And I have to be, not sound super cheesy, but I'm very grateful to him for being extremely strong in a lot of areas that I am not. So Eric, you could press into that later if you want to.
But wait a minute, but everyone wants to know who's smarter.
Oh man, I think on Mondays and Wednesdays I'm smarter because he wakes up a little slower. I think Tuesdays, Thursdays, he's probably smarter. On Fridays it's a toss-up. So I think it just depends It just depends on the day.
Diplomatic. I have an identity.
You heard my training. You know, in all seriousness, I think it depends on the topic. I think, we lean heavily on Josh, who had a background at BlackRock and Morgan Stanley when it comes to sizing of markets. Also, he is definitely a visionary, whereas Jack and I would slot a little bit more in the engineering, very technical backgrounds. We like to see how things are going to get done in the near term, right? And so that's a good seesaw for us as a team. But yeah, so we all three ended up kind of doing something different. And while we were in New York City at the same time, Josh, Jack, and I had this idea to start writing about the industry. And so we started writing in about 2016 about games, about where we thought gaming was going and kind of what we thought gaming needed. And truthfully, Eric, we had a lot of people start reading that we didn't deserve to listen to us. We were very underqualified, but we had a lot of hot takes, which, my any advice to anybody who is a content producer, have an opinion, because gosh, like that's what people want to hear. Like, even if your opinion's dead wrong, and I've been wrong about a lot of things, publicly, and you can research it to see what I've been wrong on, but have an opinion, have the gusto to do that. Started writing that, and then through that, honestly, we had some people contact us from the industry, some, big angels and former founders in the space that said, hey, look, we think you should raise a fund and we'll be your first LPs. And so it's kind of an unconventional story, and that's how we got going.
That's really cool. For the record, yeah. I grew up in Saudi Arabia, so I kind of understand the nomadic lifestyle of expats, which is different, unique background.
Where in Saudi Arabia did you grow up, Eric?
In the East Coast, Jubail. And then I went back to Saudi in 2000. And I also have a twin brother, but for the record, I am better looking and smarter than my twin brother.
Nice.
Which is just truth, right?
I would have assumed,
yeah.
Eric. I would have assumed for sure.
So anyway, describe actually the one thing, like, you have the three partners, but what is the actual full team that you do to run all the money that you run?
Yeah. So, right now across our three funds and then a couple other vehicles that we've set up, we manage about $270 million. So that's the AUM of the firm. We have a team of 7 who are full-time. There's 3 partners. There's 3 other people on the investment staff. We have a principal and then two associates who help us process deals. And then we also have a person who heads up our platform. Our platform, a lot of people define this differently. Think of it as portfolio support post-investment. So, once the check has been written, a lot of times the investment team, and we like to consider ourselves very involved, we decided as a firm to invest heavily into that. So we're actually growing and building out that team, which is, after investment made, how do we make this operator successful so it's a good outcome for the fund?
That's really cool. And I happen to know Danielle, right? Who works as an associate there.
So I will say Danny is smarter than me and Josh. So I will confidently say that. So, we're grateful that she joined our team. And we do have a firm policy that we only want to hire people smarter than us. And so eventually they'll probably just displace us out of a job. But she's been a great pickup for us, and it really stretched us to think a lot of different ways on different topics. And that's kind of what you want on your team. She's got opinions. So kind of going back to that, she's got takes, and that's what you need.
It's funny because I actually get approached by a lot of people on LinkedIn because of the podcast, and she happened to be one of them who listened to the podcast and reached out and said, hey, I'm working at Activision, I'm doing strategy work, and I have this opportunity to join a VC. And I'm like, dude, go to the VC. What the hell are you doing at Activision? What a terrible job. I mean, it must be awful. It's like, you got to go work. And that's how I first learned of Convoy a few years ago.
I love that. I love that.
And
she's been great.
And so, like, for me, anybody that's like willing just to reach out and be that, I wouldn't say, even use the word aggressive just seems like a negative connotation, but being that aggressive and being that forthright, and then also being so eloquent and smart about what she's doing. I mean, I think she went to Harvard or something. She's no dummy, right? She was at McKinsey. I don't know. She had an amazing background. But anyway, anybody that does that, I hats off, and I usually respond because I'm just impressed by that kind of gumption.
Absolutely. I've told a lot of people, raising our fund, I have the firm belief after going through this and building this business, you can get to anyone in the world. You just have to try hard enough, right? We live in such a connected economy. Eventually you will get in front of the person. So, case in point, back in the day, if you were listening to somebody, on radio or through some medium, it was pretty hard to actually get in touch with that person. Today I always kind of tell people when, I'm trying to, be helpful to, especially, people in college or, earlier in their career, I say, you have no excuse. You've got every tool possible to get to that person these days. So the reason you don't get in front of the person you want to, it's really just on you. And that's, I think a lot of successful people, especially in their younger parts of their career today, are fully capitalizing on that.
Yeah, quick correction. She worked at McKinsey for 2 years, and she's an industrial engineering degree from Poly State, which I think probably, made you like her, right? Because of more of a technical background, I suppose.
I have an affinity also for people that just hustle, and I think Philip and Taylor and Danny on our investment team and Danuka all kind of embody that, where they show that gumption, that kind of extra mile, and so something we're really proud of actually today is that we've had no one leave Convoy since they've joined. So we have 100% retention since we started the firm 4 years ago. And we really plan to keep that way. And something that's a little unique about us is we only hire people, especially on the investment team, that we plan on making partners one day, right? Like we have to envision that. We're not hiring a kind of a churn factory to spit people out of.
Proud papa. Huh?
Yeah, exactly.
All right, so one of the interesting parts about Convoy, from my perspective, is that your focus, historically at least, has been on more technical side, more like middleware and enabling software, enabling services, et cetera, and not really focused on the game side itself. And I imagine you kind of said this already. Part of it's probably your technical background, but are there other reasons why, you're focused more on that side of the business as opposed to the content creation?
Yeah, so there's a lot of reasons, and the top down of it, right, is hey, look, you've got 3 billion people in the world that play games. It's about 38% of the global population. I think it's sitting at just under 8 billion today. One, just off the bat there, whatever you've got 3 billion people using, we think it demands people who are focused on funding companies that support the infrastructure to service those 3 billion people. So that's just the first point. The second point I'd tell you is content is a red ocean. Just generally speaking, it is a red ocean. If you look at, the number of games released last year on Steam, it's, still, topping over 10,000. On the App Store, I believe you have over 900,000 games. On Google Play Store, it's over 400,000 games. It is very, very hard to pitch that you're entering a blue ocean market, which I would definitely prefer as an investor. That being said, you can do quite well in content, which is why a lot of people do chase content. It's incredibly scalable. It can go up really quickly. I mean, look at Fall Guys, look at Rocket League, kind of out of nowhere hits. And I understand the desire. For us, we've determined as a firm, hey, look, that's not our background. We haven't run studios, and that's okay. We think we understand this other side of the business much better. And the other couple things I'll highlight here too is it's a slower build for most of the businesses that we invest into.
Right.
You're not going to see typically 12-month kind of home run in a B2B business. That's okay. We like that because it's a little bit more defensible too. There's more of a moat. Those users don't leave quite as quickly. And then the last thing I would sort of highlight on content investing is it's often the most expensive entry point in the market. If you're looking at when you're trying to get into gaming as an investor, most people are gravitating towards content, and that is where most of the capital goes. And therefore, you're getting 40 million pre-entry points on seed rounds versus 10, and that's less attractive to me. So for all those reasons, also paired with probably that most of the other funds in the space do tend to focus in content. We like to stay and kind of swing at our pitch, and so far so good, and we'll probably just keep swinging at it.
What are some of the most successful companies that you've invested into with exits to date? Just like one or two that come to mind.
Yeah, so some of the best companies to date that I'll highlight to you that are still live positions, which are things like GameFam, which is the largest publisher on Roblox. This is something that we did really early in the seed. We actually had so much conviction we led their Series A. You know, Joe is phenomenal. We're seeing Joe,
the evangelist.
Yes. If you know Joe, we love Joe. Joe is going to be here in Denver hanging out with us in about 2 weeks. So
Cool.
I'm excited to see Joe. So that's a great company out of Fund One that we backed. And honestly, I love the vision of kind of bringing professional operations to a novice field, which is kind of what I would classify what he did so well. And he navigated such a tricky landscape, right? Whenever you're trying to produce value for kids, there are a lot of landmines, right?
Yeah.
And I think he's navigated that super well. That's one that I love to highlight. Another company that I would highlight to you is Carry First, based out of Africa. It's the largest publisher in Africa. They built a really incredible payments rails to allow people to actually monetize that user base. So we led their seed extension, did a big part in their A as well. This is a company that I think is going to the moon. And very excited about them. Uh-oh. I lost you, Eric. Oh.
I was supposed to interview them, and
really?
and I said no, but I think I probably have to do it now. If you're talking them up so much,
I'm telling you, they're pretty great. I'd get on a call with Cordell or Lucy, one of the two founders.
Lucy, I think. Yeah.
Yeah, they're pretty great. Lucy's also going to be here in a couple. We're having our summit here in a couple weeks for our investors and a couple.
Oh, very cool.
Yeah, so we're getting a couple of our companies to come speak to our investor base, so we're excited about that. So Lucy will be coming in as well.
Cool.
Yeah.
All right. So the one question I always get asked is, how do VCs work? Right? How do they actually make money? And how much money do they make? And we're going to obviously speak. We're going to basically not what you make, but just in general what you make. If you I'm just going to set this up for you, and I want you to just kind of walk through how VCs get paid and what their annual salary will be depending on how much money they raised. Okay, so if you have $100 million fund, assuming you have one LP, a limited partner is the ones that invest in the fund. I don't know, small family offices. I don't know, whatever, mutual funds, whoever else invests in this. All right, you have $100 million, you have two general partners and a staff, right? And my question is, how do the economics break down over the life of the fund? How much do they run? What is the management fee, the care? Like, without getting into the goggly goop of all this numbers, like how much money do you make and how do you make that money?
All right, let me. This is a question I'm glad you asked me ahead of time, so I could try to break this down simply, because it does get into the gobbledygook of numbers here. But assuming you have a $100 million fund, so that would be classified in venture as an early stage fund. I know that sounds like a ton of money. It is a ton of money, but in the scope of venture and also just general asset management, that is microscopic on the scale, right? What are the economics? So typically $100 million, you have a lifetime of the fund. It's either somewhere between 7 and 10 years. What does that mean? Essentially, in that fund, those investors are signing up saying, hey, look, we're going to give you this capital for this period of time. At the conclusion of that, we're hoping that you've unwound all your positions, return to us the money, we'll see where we're at. Typically what happens is you get an annual 2% management fee for at least the duration of the investment period. And so what is the investment period? It's typically between, on the low end, 2 years. On the high end now, it's probably about 4 years. So you get about 2% a year to manage that fund. So 2% of 100, that's $2 million a year. That's your operating budget to work with. And then here's where the answer becomes a little bit wishy-washy for you, Eric, on what does a venture capitalist make. It really depends on what the venture capitalist decides to do with that money, right? In the sense of, well, one, are you going to staff up? Are you going to get a bunch of investment members to build up your team? That's one. Two, are you going to get an office space? Are you going to travel a lot? Are you going to go to conferences? Are you going to host conferences? Things like that. And then thirdly, I look at, how many partners do you have, right? That's another huge element to this. So, theoretically in a world, if there were really just two GPs with a $100 million fund and they chose to never have an office, never travel, only pay themselves, they could each make $1 million a year. I will tell you, I don't know anyone personally who chooses to do that.
A million. Well, hold on. $1 million from the management fee, or $1 million from the management fee plus the returns, the assumed returns?
That would be just off the management fee, right? Because if you're looking at 2%,
right.
I will tell you, I don't know any fund that does that because at the end of the day, that would be a pretty short-sighted move, right? Maybe you could get away with that for one or two funds, but at the end of the day, you then do need to actually start thinking of, how do I institutionalize? How do I operationalize? How do I get help so I can process more opportunities? How do I get in front of the best deals? I would tell you it'd be very hard for myself, Josh, and Jack to do that without our team and also the providers that we work with to help us achieve that kind of best return. Because really what most venture capitalists are hunting for is carry, right? And what the definition of carry is, so let's just kind of go with that $100 million example. Most funds are structured this way, and this is called, the European waterfall method, and this is what I'd say is very LP friendly and what most funds today are structured as, which is, I will not take $1 of carry until I've returned $100 million to my LPs, right? So in this scenario. After that, it's an 80-20 split. So let's assume I returned $200 million. The GP would have a right to 20% of that $100 million net, right? And so that's what we're really hunting for, is those big opportunities, those big exits. That's like the holy grail for venture, right? And so it's very lumpy. That's really what you're hunting for. I will tell you that that does not come in a sweet straight line. It's typically like big moment, you wait a while, another big moment. That's typically how that occurs.
Right. And so so holistically, you basically get 2% management fee for the first 4 years. So that's like, you could pull a salary of, let's say, for a $100 million fund of like 600 to 800,000, somewhere around there. Then the other parts of that management fee go to building the organization, right? Operations, hiring people like Danielle, et cetera. But then the whole goal is to get that big payout, right? And it doesn't come at one lump sum, but let's assume, I think you told me at one point that 3x is kind of the general average performance of a VC firm, which seems high, to be honest, but let's assume that's
not the average. That's what people are shooting for, but yes. That was average, man. I think a lot more people would be in venture for a lot longer.
Okay. All right. Yeah. So that's what I thought. That makes more sense to me now. But anyway, so if it's 3x, that means that $100 million investment becomes $276 million over the 10-year period, let's say. And you discount that back to the present, or you average that out over the years, that's like $1.5 million plus the management fee. So you're talking about like $2 million a year, in theory, that you could be making from being a VC. But obviously it's very lumpy, and you get big paydays at different times. But it's a good business.
That's the hope. Right? And I would tell you is, it is a good business. I would tell you it's a little lower than that because I think for anyone who is a business owner, there's a lot of expenses that come along the way. So I would probably half most of that and say take 50% of what you probably are saying, and that's probably a little more realistic for people to expect. I would tell you that generally speaking, when it comes to running this business, it is a funky one because you don't really know if you're really good until that decade out, right? That's really when you kind of get that feedback loop of like, I'm very good at this, or, I'm very bad at this, right? And I think that's what's interesting about this business. It's not a super quick feedback loop because if you're taking especially an approach with technology-driven investments, you got to let the maturity of these companies kind of play out, right? And I'll tell you, even with Fund 1, we've had companies, rise up and rise down. We've had companies kind of stay low and then rise up really quickly, and you're like, that came out of nowhere. And so this is a game of surprises, right? Just generally speaking.
That actually leads right into my next question. Is like, what makes a successful venture capitalist? I have been investigating the space, going to Big Craft, talking to Play, talking to like some of these other guys. Very, very impressive people just in general in terms of clearly intelligent stuff. But I break it down in a few different things, and I know what the answer is. Like, generally speaking, it's all of it. But like, there's industry knowledge, There's obviously relationships with both VCs and obviously LPs, but that's kind of a given, right? Biz dev, like the boiling the ocean thing of going out there and meeting as many companies as possible, right? But then there's also deal structuring, negotiation, and diligence, and all that other stuff. Like, again, I know the answer is all of the above, but like, what do you think is the most important? Like maybe rank it. I don't know. Just like talk about like what makes in your view, a successful VC, and what other things am I not thinking about?
Yeah, I would tell you a couple of things that I think make a really successful venture capital firm is obsession around process. We process to date about 700 deals a quarter, right? Like that's what we did last quarter.
Okay. Let's stop there for a moment.
Yeah.
That is a lot of processing, right?
Yep.
What does that even mean? 700 companies that you're reviewing in theory and interviewing and getting on Zoom calls and talking about bullshit and looking at documents. Like that seems impossible for what, 6 people? Yeah.
So six on the investment staff, I would tell you, hey, we just don't sleep ever. No, I'm just joking. I do have a life. I try to keep to. So the way that we define process is we received the opportunity. It hit our desk. We call it our deal desk across the team. We process this deal and say, look, it might as well just be like we'll pull up the deck, we'll look at it. And these are deals, by the way, that fit our thesis and fit gaming. They're in the gaming sector. Mm-hmm. So we look at it. We're like, hey, for these quick 2 reasons we're out, right? Like we do that a lot. And so not all these deals are we on a call with. That'd be, unsustainable. Right. A certain percentage of those do make it into a first call though, right? And we actually do jump on the call with quite a few companies. I think the peak in a quarter is probably close to like 150 across the 6 of us, where that's the first step. And then obviously start whittling it down to like what goes to the next step, what gets to investment committee, which is where we make the decision to actually vote on an opportunity to then make an investment. We make about 10 to 12 deals, 10 to 12 investments a year. So that's kind of our average. And so how do you whittle down from over 2,000 opportunities to 10? That is not just an art, but it's really a process. And I'll tell you, we have very defined processes on how to move stuff forward. And I think that is often an edge that a lot of people miss and mess up is because, hey, like, you know what, just being in the right place, the right time, making sure you weren't tired when you looked at a good opportunity and passed on it, that takes discipline. And so something that I tell you we focus a lot on is discipline of investment review. And this is something that's core to us on our team.
And you guys have like some kind of framework you've built in order to like make those yes/no decisions as you go down.
We do, and I'll tell you, a lot of that's a lot of work, on our side. But we have a very defined framework for how to move opportunities forward and get them in and out. So we say like, hey, look, you can only have so much on your mental plate at once. You gotta scoot stuff off. Right. If it starts stacking up, you're gonna make bad decisions. And we've actually reflected at certain times. We study our like historical, precedents for us of, hey, when did we make our best investments and when did we make our worst investments, right? And there's certain correlations with how much time was on how many deals were on our plate at the same time. Like, hey, we don't have capacity to actually review these things. So we spent a lot of time obsessing about this. You asked other questions about what makes a good venture capitalist. I also think, just truthfully network. There's a lot that is unscalable about this business, and you need to know people. This is definitely a business where getting to know the right people who will refer great opportunities, like Eric, you and I know each other. You see an opportunity in gaming, it'd be like, hey, like, I'm not going to lead this round as an angel myself, but I do know these funds. And, you hope that, we're one of those funds, right? And that takes time, and that just takes years. And so you can't really put NOS on it and just jet into a new industry. Then that's what is a moat, right, for funds like ours that have been around for a while, where people do know us. We've managed to not piss everyone off, and people still continue to pitch us and enjoy working with us. So that just takes some time.
Right. Yeah, I mean, I guess, what's interesting about that is that's what I started to uncover pretty quickly is like, with talking with these guys, it is a corp dev exercise, more or less, of establishing relationships, talking to all these people that are influencers in the business so that you are the first name that comes up when these type of opportunities happen. And I think a lot of people miss that. It's not as simple as just putting up a shingle and saying, hey, I got $100 million from the Saudis and I'm going to start investing in gaming. That's kind of was my impression as well. And how like the boiling the ocean idea. And when I talk about boiling the ocean, I mean, it's more like the meet and greets, like going to like my biz dev friends at Sony go to these conferences like GDC and they have fucking back-to-back meetings from sun up to sundown and past that every day of GDC. I mean, is that the type of activity that's required in your view?
So I've done that. I've done that at every conference. I've done that GDC back when E3 was really a conference.
Right.
We'll see how that goes. We'll see how it goes. Slush, Pocket Gamers, all these groups, right? Like all these places. I've done the mayhem approach, right? And that is an approach. I'll tell you that is not the approach I typically take. I like to take more of a very concentrated bet on. I think that Eric, you and I are going to have a great time together, and I want to bet that an hour and a half with you is worth it, right? And I really distill it down to having like 6 meetings a day. Like that's what I like to do at conferences. Is the 3 meals, and then there's 3 meetings in between, and I kind of hone in on quality. That's how I choose to do it. That also I've noticed keeps me sane, because I think in venture capital, there's always the next deal. There's always one more opportunity, and
are there any opportunities that you've missed that you kind of like you did a postmortem on your process and realized how it slipped through? And
oh man, Eric, absolutely, we've missed companies, some great companies, right? That would have made us a lot of money, and like hats off to those operators for crushing it. But yeah, we've definitely missed billion-dollar opportunities pretty early on, right? And the ones that kill us aren't the ones that sometimes it's out of thesis for us, like it's a content studio, and that's not something we focus on. That's easier to live with. The ones that are harder to live with, where you're like, I thought that this founder couldn't do X, they did X, and they proved me wrong. Those are the ones that you're like,
That's tough. Yeah.
So we've got a wall of shame. I can't tell you the names on it, but we do have a wall of shame. And
that tests your mettle, right? That tests your self-worth and self.
I've taken some long walks, Eric. Afterwards, and I've gone on some of these walks with my wife, and talking her through it, and she's like, she's helped me mentally process through some of these misses. And I think that is
stupid.
Yes, not relaxing walks. Let's put it that way. But I think that like those are the moments where you learn that this is just part of the industry. You're not gonna have 100% batting average. You're never gonna find perfection. You're always gonna miss something, and you have to live with that, right? And I think that's the hard part about what we do, is just missing, and then seeing the groups that did move, and then you're like, oh no, that could have been us. And that's the tough part about this job.
Yeah, no doubt. One of the concerns I have about VC in general, obviously you're going to get some big wins, but the current market is absolutely horrendous, right? The IPO market is shut. People aren't acquiring that many companies. And I said this earlier, but the biggest thing is that there's these VCs that have come into the business, these huge ones, and I won't name names, but everyone knows who they are, that have basically created unprecedented levels of supply for gaming. Like, we haven't seen VC in gaming since the early days of frickin' mobile, and a little bit on VR, but that was like kind of a really short. So it's like all these guys came in with all this money, investing in blockchain, investing in VR, not VR as much, but like free to play and maybe some mobile and other stuff. And I'm sure you've been involved in. So it seems like it creates this artificial bubble. And now we're in a market that is down. Like, some of these companies are down like 80%, 90%. So how do you navigate these waters? And more importantly, how do you communicate to your LPs that their 100 million is now worth probably 50 million in current market conditions? Or is that, I imagine you don't do that, but explain to me like how that process all how do you manage this during these less than ideal times, let's say?
Yeah, I'll say a couple things. Like, you're 100% right. Like, over the last 2 years, venture capital firms raised records amounts of money. Like last year, I believe it was around 128 billion was raised in VC, and that is, dramatically up from the, I think 74 billion roughly raised in 2020. Right? We're talking about astronomical amount of money that was poured into the private markets. And so that's the backdrop. So if you think about, if we go back to kind of our earlier discussion around, you've got a 2 to 4 year investment cycle, a lot of funds are sitting on that money right now, right? They've raised these massive amounts of money, and guess what? They have to deploy it. They've got to deploy this money, and that can be good and bad. So the good part of that is, hey, for entrepreneurs, a lot of these groups still have money to go raise from, which is good for especially the companies that deserve it. It's not like there's no sources of capital out there. The bad parts is, one, well, there's a lot of speculation on if actually a lot of that money is available to those funds. So something that happens often in cycles like this is, if you think about who gives money to venture capital firms, there's kind of a couple profiles. There's endowments, there's corporations. So think of like a Microsoft or like an Activision or like groups like that. That's a corporation. Then you've got private money from like rich families, and then you've got typically like sovereign wealth funds. Those are kind of like the four archetypes. Then you've also got like pension funds across the board as well, but I'll kind of lump those into endowments and pension funds. A lot of those groups just got hammered in the public markets, right? Like they got hit very hard. We're down, just under 20% year to date on the S&P 500. And a lot of those people are telling funds, I think especially, the larger funds, like I would be surprised if they're saying, hey, like we would appreciate it if you didn't draw down capital too quickly, right? So that's not out of the scenario. So I would tell you, like, there's a reason a lot of people are moving slower right now. There's a lot of reasons. One is, fear because the market is unstable and they don't know what is coming next. That's one. Two, we haven't bottomed out potentially on valuations yet. So, this is why if you look at gaming deals done last quarter versus a year ago at the same quarter, Series A deals were down about 15% in volume. We're down about 47% in Series B, and we're down about 67% in Series C for gaming deals, right? Like a lot less transactions occurred last quarter than a year ago, the same quarter.
Right.
So there's a lot of reasons for this, and it's actually a really fascinating study. It's like people raised probably more money than they should have for these funds. Then you've got a ton of groups that fund these funds who are getting impacted by public markets and interest rates. And that is a whole other discussion. And so a lot of them are just kind of freezing, right? And I'll tell you, a lot of that freezing is something we saw also actually when COVID hit, right? So, when COVID hit in March of 2020, that's really kind of the months I'd say like the markets really reacted, March and April and May. We as a firm chose to continue to allocate. We actually were really grateful that we did that. We backed some great companies in that time frame, and we're going to continue to allocate during this downturn too. The things that just you have to account for generally is there's a realignment on valuations, right, which got a little bit out of control, I'd say, in 2020 and 2021 for a lot of groups. And so something that we as a group watch pretty heavily is our average weighted dollar in, like what's the valuation that we're getting in at, and then what's the industry average, and then we want to stay at a certain ratio below that, right? And so we are very honed in on that.
Okay, so you can track that relatively accurately with a certain, like what service, like PitchBook or something?
So kind of a combination of a couple things, but I'll tell you, I'm a big fan of CB Insights. So shout out to those guys. They have some great data over there on the private markets.
Okay, cool. Yeah,
I'm hoping they give me a discount for saying that next month. I feel like I just gave them, some audience. This is great.
All right. So more specifically, I guess this is a similar question to what I asked before. Is that like unprecedented levels of demand, unprecedented levels of capital in the space, bigger VC firms that are spending like drunken sailors and bringing up valuations. That's like one side of the coin, right? The other side of the coin is that maybe some of these companies or individuals or spin outs of Riot and the content guys, and specifically Riot and all the Blizzard people who left, and like the exodus that was Blizzard for the last couple of years. Do you think some of those companies, how do I say this? Maybe they weren't the right people to invest in, but people were so desperate to find investments that they were funding like straight out of really early. Like, isn't that a huge risk? Like, you have a capital valuation risk, but you also have a quality risk of the type of investments that were made because people were less discerning.
I think this was really highlighted in Web3 and games, right?
Right.
So
right. Oh,
so,
yes.
Yeah.
Sorry,
so I think what we saw. Yeah. What we saw here was, gosh, there's a lot there, but I think what we saw here is generally this: a lot of people in Web3 were hunting for a new use case outside of financialization or financial products. So
right.
DeFi is often the word that's used. I think there's a lot of great use cases for Web3 in that field. They thought they found games, right? And a lot of them found that games was going to be the onboarding of users to leverage Web3 technology. And so I think it's really easy to kind of be down on or crap on like an industry when it's at its low point, which is definitely, it's in a low point right now. But I think what happened was a lot of that capital from Web3 flowed into games, and they were like, "Oh my goodness, this is our usage savior," right? And they funneled money, and pretty much anyone with a pulse in 2021 and 2020 pursuing games with Web3 had a strong opportunity to get funded. And
right.
And I think a lot of groups raise money that shouldn't have raised money, right? And that's just the fact. And so
I'm assuming you're saying this because you were not one of those people that were investing heavily in Web3, because it seems like you're pretty confident that you're avoiding that.
So we did
mannerisms.
No, so I mean, we did several deals in Web3 in 2021 and 2020. I'll tell you, we learned a lot from it, and I think I would stand by every investment we made in Web3, because to me, like, it's really easy to say, like, to comment on this macro trend, like, two things can be true at once. That was very unhealthy and bad. But then do I think that Web3 has some interesting use cases that can be better for the player base long haul? Yeah, I think there are some good use cases. Like, one in particular that I'm excited about, which I think Sky Mavis kind of pioneered, was potential profit sharing with their player base. And that was something I was excited about, right? And so we made some investments, and I think all investments we made, we can stand by today. But I'll tell you, we were extremely selective because we got hit with a lot of the same nonsense that got funded by groups that honestly just don't know anything about games, right? A lot of groups funded things that just don't know gaming. But there's some really smart operators who are, looking to incorporate Web3 into their titles, right? Like there's a lot of great operators from traditional gaming doing this, who are smart and are doing this thoughtfully. But I do think that Web3 got the better of gaming in 2021. We learned a lot. We've course corrected, and I think there will be a place for Web3 technology in games in the future, which is why we're not out on Web3. But there's also the reason I chose to not, as a group, Josh, Jack, and I, we chose not to raise a fund dedicated to blockchain gaming. And we were actually one of the only funds in games that chose to do that. So that was a little bit different. And I'm really glad we did. It's not because I don't believe in it. I just think it's too early. The player base is 3 billion gamers versus, I think, there's generously the highest stat I've seen is 30 million people in Web3 titles. I think it's closer.
That seems
to sub 10.
Yeah, I think it's around
it's closer.
3.
Yeah, so Eric thinks 3. I think it's closer to 10. I don't think that merits us raising a whole dedicated fund for that strategy.
Right. That makes sense.
So
that makes sense. So actually, under those guys, like, what are you most looking forward to? We talked, a big podcast about the metaverse and Matthew Ball's like vision of what's to come and sort of thing. So are more opportunities around enabling technologies for that interesting to you, or are there more content plays into that world that are interesting? Like what I guess to the extent that you can share it, like what is your kind of a longer term strategy over the next like 5 years, right?
Yeah,
in terms of
I would tell you, without giving you my best stuff, Eric, for you just to go invest into on your own, right?
Yeah, with my gajillion dollars in my bank account. Right.
Hey, so Eric was outlining kind of the sole LP method. He is actually the sole LP of Convoy. That is 100% a joke. So we might have to edit that later. I'd get in trouble somehow. But generally speaking, what excites me the most is I think there are a lot of industries out there that need to learn a lot from gaming on how to manage engagement with your users, right? There's no other activity in the world that commands this type of engagement or this percentage of the planet that we have in common with, in the sense of what the heck does 38% of the world do that's in common other than games? Like, besides eating, drinking, and walking, video games is probably the most common denominator that we've got. And to me, that is like the backdrop for why I'm so excited for games to infiltrate things like education. So this is something we pushed a lot of time and money and energy into is gaming will eliminate the textbook. The way that you learned, Eric, the way I learned in school is not the way that kids will learn in the future. And I think they're drawing their inspiration from gaming because games know how to captivate an audience. So I'm very, very excited about that. I'm also very excited about soft medicine with games. So things about treating things like ADHD, anxiety disorders. There is a lot of evidence and a lot of data that is pointing to the fact that games can be actually a core part of that treatment plan, which we're really excited about. There's a lot of other industries too that I'm excited about. But those are some of the ones that get me most fired up today because I think they're in dire need of help, right? And I think gaming can do that. And so I don't like the word like the gamification of whatever X, Y, and Z. I think it just let's use like real terms like this is why I hate the term like metaverse because it's not defined by anyone well that I've ever heard. But let's leverage the engagement tools that games has figured out for industries that probably need to work on engagement for the betterment of our society, right? Which leads me to like why education needs to learn from games.
Right, and not that I know as much about you, not even close to what you probably know about, but from an education perspective, is that all these private schools in San Francisco are focused on teaching to the kid, right, and changing the way the curriculum works. Like you're an auditory learner, you're a visual learner, whatever, and they change the entire dynamic of how people learn based upon what type of kid you are. And in the traditional way, that's impossible, right, to do it. But with technology and interactive, you could actually make custom plans for the different types of students that you have. And there's so much research going into this from the education perspective. I can imagine connecting the dots with interactive and helping kind of facilitate that at a much broader level because it's not as expensive if you're doing it, from a technology perspective than it would be at an individual level at a classroom.
I 100% agree. I think like just the amount of time that is wasted in the classroom. Also, it's just shocking to me. And like, let's use technology for this, right? Like, and I have a lot of personal friends who are teachers and a lot of teachers in my network, and I've never been so bearish on our public education system.
Holy crap! Did you see the recent data on the performance for math and English in the entire country? It was just published a few days ago. It is horrific. I mean, they are performing at so low levels. It is like it's a catastrophe, right?
It is, and I look at
all the money we're spending, and this is all we're getting. Like, we're not doing it right. Let me just say, not to get political, but we're not doing it right. Not at all. Not even close.
Yeah, this is where I look at what's solvable here, and a company in our portfolio that is going after this head on is a company called Legends of Learning. Currently 5% of elementary schools in the U.S. use their platform. Actually, if you're looking for another guest who's probably smarter than me, you should go talk to Vadim, who's the CEO. I'm trying to line your podcast up for the next 10 episodes.
Just keep pushing your book, dude. Just keep pushing your book. It works with me. I'm fascinated. I want to learn. So I will bring this guy on.
You'll have a fascinating conversation with him. But
see, the problem is that I am such a moron compared to these people that like he's just going to put me in my place. So I gotta do a lot of work to prepare for like talking to people like this. But
yeah, you got to prepare more for him than for me, for sure. I look at this and I really do mean this, Eric. Like I think gaming, we've often been slotted as like it's just fun, and I play games every day, and gaming is at the core about enjoyment and fun, but that doesn't mean there's not a lot of lessons there we can't learn about how do we manage and get people motivated to do things that to eat their vegetables, to do their math homework, to work on English, right? Like to work on their anxiety levels. There's a lot that we can do from and learn from games, and that is something we get very, very excited about. Also, I'm a big fan of unification tools. I think that's one of the best moats we have to avoid potential strife in the future. And so, something, I was kicking around the other day with my team I was like, if unfortunately we ever do enter another, war at the global scale, like what will that look like with all these multiplayer online games where you're playing with people from the other country? Like that's never existed before. Yeah. What's CSGO, what's Valve going to do? And I find that fascinating, and I would like to think gaming's another moat of protecting against that. I think there's arguments for why it doesn't matter at all. But for me personally, I look at games as one of the great moats we have from mutual self-destruction, and that's a societal tool I think that we haven't really explored to the fullest extent yet.
That's funny when you said that that was like terrifying, right? Like all the espionage that's going to go on behind the scenes on CS:GO, when these countries are going to war with each other. That's where my head went, right? It didn't go the other way where we can't.
Eric, I might be too glass half full on this one, but I do like the concept of and this is definitely speaks to my personal upbringing. Games is a common denominator. I've played tons of games with people that I do not speak the same language with, right?
Right. For sure.
And having common denominators is always a good way to sort of break down the barriers of kind of demystifying the other, right? And like I think that is something I'm hopeful for like us going forward, is that we can leverage gaming for that societal like positive impact.
No, and it actually could begin with education. Like it begins with playing games with each other, but education is seems like an easy win to even playing games with people in like Peoria, right? It's like a different experience. Or my son playing games with this kid in Alabama. For like 3 or 4 years, he was playing Roblox with this kid from Alabama that like lives in a trailer, it's like, and listening about his life, it's like, how else do you get that kind of exposure to things? And I know this is a very obvious thing, but it's the same idea. It's like, and it was really good for him to learn how other people live. It's hard to do when you live in San Francisco.
I think that's a great point. I mean, it's a great touch point for people early on. To experience things outside of their neighborhood, right? There's a whole other side of that, which makes you want to protect kids from experiencing things outside of their neighborhood. But at the same time, like generally, I think it is a net positive, and something I'm super bullish on.
I'm definitely gonna look out this Legends of Learning, get him on. All right, I think we're gonna leave it at that. The last question I'm going to ask on everyone is like, in what way do you think your product and service kind of helps solve problems or innovate in the interactive industry? Like, what is your position and that helps you kind of like facilitate innovation?
I think, at this time when early stage founders launch a company and they take money from people, they are taking partners early on to help them think through and shape their vision of their company, their product, who they hire, where they go to. And those entrepreneurs, I think, should demand that the money they're taking isn't dumb money, right? And I would hope to think that Convoy is smart capital in the games industry, that we're not just a passive check that just sits there idly by, because that's not what they need at this stage. They need help, right? Like when they're launching a company, you need tons and tons of help. And I think that Convoy's fit in the market and the thing that we're doing to help innovation is we dedicate ourselves to becoming, not as great as experts as they are at their craft, but we're a voice that you should listen to in the room. And I think that is something we try to really stick to. We spend a lot of time of like, if sometimes we pass on companies because we're like, we got nothing to offer you. Like, you shouldn't take money from us. And I hate doing that, but like sometimes that makes sense where I'm like, I'm trying to do you a favor. You should go get somebody who knows a lot more about this than me.
Right.
So anyways, I hope to be part of that movement of VCs that are smart money, that aren't just kind of cheerleader checks on Twitter, that we are actually in the trenches with them, battling it out, and helping them through really tough stuff. Because, launching a company in good times or bad times is hard. And I'll tell you, this cycle is going to be tough for a lot of companies to go through. And I always tell, like, the best way to ask for a check on a VC is don't ask to talk to whatever founder reference they have. Ask to talk to a company that shuttered down under their portfolio to see what they acted like. That's when you get the meat of, like, who are these people, right? Like, are they jerks? Are they unhelpful? And hopefully, hopefully I stand the test against my own kind of qualification. But that's something we really try to do, is not to abandon people when they need us.
Very cool. Well, thank you, Jason, for taking the time to chat. And I'm sure we'll speak soon, and good luck with your conference next week.
Thanks, Eric.
Appreciate it. And say hi to Danielle.
I will. So hopefully I'll say something smart at the conference. Hopefully. Let's keep people coming back.
Right,
thanks for your time. Appreciate it.
All right. Bye now.